Good morning, everyone. This is Mike Minter with Financial Synergies, and this is your Market in Minutes report. We're looking back on March 4th through the 8th, of course, last week. And so let's kind of talk about what occurred in the markets. By the way, I hope your week was better than mine. I caught the COVID bug last week, so it kind of knocked me out of commission. So that was not fun. So I'm playing a little catch up here. So if I sound a little stopped up, that's the reason. But let's take a look at the 5-day performance. It was a mixed week, kind of up and down given the market. Dow Jones was down, S&P down. Small caps, the Russell 2000 were up a smidge, and Nasdaq down as well. The foreign markets were up nicely, 2.5%. So good news for diversification overseas. But as you can see, kind of not a terrible week, but kind of down for the most part. Let's take a look at year-to-date numbers. Of course, still looking very, very strong on the year. Good to see across the board. Dow Jones up 3%, S&P up almost 8%, which is still just great considering we're only in March. Russell 2000 up 3%. This has had a nice comeback here in the last few weeks. Good to see small caps starting to kind of break out just a little bit. So this is the kind of that broadening, the breadth of the market as we've spoken about in the past. I want to see more of that, so that's good. Nasdaq up 7%, and the EFA, which is foreign stocks, now up almost 6%. Also a good area to see progressing. So let's now switch gears and talk about rates. Not a ton of movement here, although they did tick down a bit, which is better than ticking up. So the 30-year is now at 4.26, 10-year at 4.09, the 2-year Treasury at 4.53, and 30-year mortgage at 7.24. That one as well came down, which is good for home buyers out there. I know the real estate market right now is a tough place to be. So especially if you're looking to buy a home. So hopefully that tick down might help a little bit. Let's talk about kind of the scenario behind what we saw in the market. So there's quite a bit going on here, especially with Fed Chairman Powell speaking last week. Stocks had a rough start to the week, obviously. So with the Dow, S&P, and Nasdaq each off more than 1% on Tuesday alone. Mega cap tech stocks were under pressure as investors appeared to take some profits. Markets clawed back much of their losses on Wednesday and Thursday with the Fed chair's upbeat comments to the boosting stocks. Chair Powell said that once the Fed was confident inflation was tracking sustainably at 2%, the Fed would consider cutting short-term interest rates. We've known this all along, but it's nice to hear him, kind of reiterate this and have that confident tone that this is going to happen sooner rather than later. So that's a good sign. The market liked it, so the S&P and the Nasdaq rallied, with the S&P hitting a record close. So that was great. Friday's employment news threw some uncertainty into the mix. So there's good and bad here, but overall I think it's good. The economy added 275,000 jobs in February. So this has exceeded the 198,000 expected by a long shot. But which would have been kind of a bad thing considering we don't want the economy to keep heating and the job market to keep heating up, because that causes inflation, and so that would cause the Fed to back off. However, with that report, wage growth slowed. This is good. We want to see that because you can't continue to have this out of control wage growth and tamp down inflation. And also, jobless claims actually edged up. So you have the situation where still great job growth, but jobless claims edged up and wage growth slowed, indicating the economy, yes, it's growing, but it may not be growing too fast, which is good. So some investors saw that as a negative, while others viewed it as a Goldilocks moment, an economy that's not too hot and not too cold. I tend to look at it as a Goldilocks. So only time will tell, but I think this is a good thing. Stocks initially rallied on the news, but profit takers appeared to arrive as the day progressed. So all in all, as we said, the market was down last week, but I think we got some really good news and great comments from Fed Chair Powell. So Fed Watch productivity. Let's talk about this for a minute. Productivity is one of the critical data points that the Fed reviews to determine its next steps with monetary policy. Producing more goods or services with fewer resources helps the economy grow while managing inflation risks. This is where AI comes into play. So artificial intelligence. The 3.2% productivity gains in the last quarter reported last week were mainly attributed to the post-pandemic repair of supply chains. However, investors may hope that artificial intelligence, AI, will play a more significant role in productivity increases going forward. I tend to think that's probably true. Yes, certain jobs may be lost or displaced. Overall, I think companies are figuring out how to use AI to increase productivity, and still produce more goods or produce more services with fewer resources. This can be a bit of a violent kind of transition for a while, given which industry you're in. But overall, I believe that's probably the case, that AI will contribute to significant productivity increases with fewer resources. So now let's talk about what's on deck for this week. We have now a slowing earnings season, really kind of slowing down. We're kind of on the back end of that. We also have some key economic data. Pretty busy week for that. So Tuesday is the CPI index, the Treasury statement as well. Wednesday is the EIA petroleum status report. Thursday, jobless claims, producer price index, retail sales, business inventories. And Friday is industrial production, import, export prices, and consumer sentiment. So a pretty big week for data. We'll be watching all that. Tuesday, in terms of earnings, is Lennar. Thursday, Oracle, Adobe, Dick's Sporting Goods, and Getty Images. So again, kind of on the back end of reporting earnings season. So that rounds out the report for this week, guys. Really appreciate your time. Again, this is all of our information, our contact information, should you need to get a hold of us for any reason. We'd love to talk to you. Also, hit that subscribe button down below. We'd love to have you subscribe to our YouTube channel and get all of our videos as they come out. Beyond that, guys, have a great week. I know it's spring break for a lot of people. Hope you guys are enjoying that, and we will be back at it next week. Thanks, guys. We'll talk soon.